Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. I hope you're having a great day. Taking a look here, of course, at Bitcoin, seeing what's going on. It's a classic case of what goes up must come down. I've got some trend lines on the chart here. We're essentially in a channel. This is rising wedge, bear flag, however you look at it. The likelihood of breaking down lower if we lose this ascending trend is higher, if that makes any sense. So I'll clarify what I mean by that here soon, but the simple way to understand it is we're reaching or approaching and or within our support range of roughly 82.5 upwards of 84,000. Okay, so that's kind of this little support channel based on previous closures. I'll show you on the daily time frame what I mean by that, but that is essentially what we're looking at there. We want to kind of either consider a long here or wait to see how the price action responds to this range, and then potentially go from there, either long or short. There's a handful of different scenarios that could play out here. Either way, I appreciate you hitting the like button, commenting below if you get a chance. Love to hear your thoughts. What do you think is going to happen next for Bitcoin? Let's take a quick look though. In the back-end liquidation data, a simple way to understand it here is that we are in a position where a majority liquidation here locally has been hit, but there's a chunk between 82 and 83,000. So if we get closer to 83K, I wouldn't be surprised if we see a quick candle wick down to that 82.5 mark, hit that local area of support, and essentially return back up again. Keep in mind there is a pretty significant amount of liquidation at 80 to 81,000. So now that we're getting close-ish, whatever you want to call it, we're getting a little bit closer there. That could be the next target for the whales, okay? Because once more, they've done a pretty darn good job of sweeping that 85 to 87K range. Okay, so that's kind of where we're at there on the smaller time frames, the last 7 days. We take a look at the macro once more. Nothing too surprising there. We're kind of in the middle of this range between 80 and 88,000 now at this point, okay? So that's kind of where we're at there. We also got a pretty significant amount of liquidation delta here, still bullish. So don't get it twisted, folks. It's not like we've broken bearish by any stretch just because we're pulling back. This is actually fairly natural. However, once this liquidation delta shifts, if it were to, then we want to kind of pay attention and consider shifting gears to possibly that of a short position. Now, I don't love the idea of trying to short into a support, so I don't think that's a good idea, but lately, we've been noticing that if you shouldn't do something, you probably should, because it goes the opposite of what you expect it to, okay? So whatever I tell you today, take the exact opposite approach there, and it might actually work out favorably. I'm mostly joking, but that's mostly also fairly true to the market and how things have been, the price action has been terrible lately, honestly. So like anytime you see the price action overextended, it's like, okay, don't buy this. It goes right up, right? So anyways, kind of take that with a grain of salt. What I'm saying here is relevant. I think the important thing though is mostly just this key level supports. If we hold those support levels, then taking trades off those ranges is important. I've noticed that key level supports are more important nowadays than it is with overextension or continuation. So just some friendly advice there. Be careful. Be careful thinking that you got it figured out. It's gonna flip it off on you. Cool thing is we did figure things out here yesterday. Took some nice profits just to clarify. Bitcoin 43%. And then of course a local Bitcoin trade too. So we claimed profit on an old one that had a little bit of profit left, and then a new trade from a couple of days ago, near protocol as well. We're also at break even right now on our our Litecoin trade, and a little bit under on our ETH trade. So it's kind of how it goes sometimes, folks. Anyways, open interest, take a look here, 83,500. Nice amount of support there. So 83.5 to me feels like a potential pivot point. You can see that reflected on the charts here as well, with our point of control at roughly 83,000. So we got open interest at 83.5, point of control at 83,000. It's a pretty good situation there overall for a potential support range for us. So I think along at 83.5 seems practical in my mind, just thinking outside of the box. Because we look at this local trend line here that has been, kind of more this shorter term descending trend, we can see that we're bullishly back testing that descending trend line. Now, when I say bullishly, please don't get it misinterpreted here. If we close, 83 or 82K or lower, obviously that would be a very bad sign. Between now and then, though, we should presume this area of support at 83,000 will hold. That's roughly what we're looking at. Either way we look at it here, we're now under the 20-day SMA, right there with the 200-day SMA as well, all kind of hanging out in the same place. We can see also that the RSI is under 50, still rejecting off at that level, so that reinforces resistance at 87K. We can see as well that MACD is converging. The key takeaway I want you to understand here is that we took forever, seemed like forever, what? 1, 2, 3, 4, 5, 6, 7. It took us 8 attempts to break 84,000. So my speculation here is that 84,000, that range of 84 to 83K, will prove as a solid support based on the simple fact that it was such a difficult resistance to break through. And now that we're above it, hypothetically, we're going to continue higher. Granted, we want to close it at the very least 83K or higher today, but the general consensus there is that that's a positive sign. So usually, and this is how trading's supposed to work, typically you're supposed to be able to buy in at the previous retest of a resistance, turn support, because the likelihood of this being a pivot point is higher. So the price legitimately should continue higher from here if it's going to continue its channel. What we want to look out for is if we break this ascending channel here, we close somewhere in the 82.5 mark or lower, that would be potentially disastrous. That could imply we're going to be retesting the 76 to 78K range. So that's just generally how that works, okay? So overall, are we in bad shape? No, but this is kind of more of a, somewhat of a natural correction. I'm not super concerned with it. It's par for the course. If I had, been available for the opportunity to short at 87,000, I totally would have. I've been talking all week about doing that. Unfortunately, you can miss opportunities if you're not sitting in front of the charts all day long, and that's just not me. I don't like to be stuck on the computer all day. So that's just me personally. Anyways, we're right here at 50 on the RSI. 4-hour time frame showing we got a MACD divergence, at least soon to diverge. It hasn't fully confirmed yet, but these are all signs letting us know we're shifting momentum. Big surprise, momentum shift. It's nothing new. Okay. We take a look at the hourly time frame. We can recognize as well, based on the Ichimoku cloud, we are effectively in this transition. So we see we're breaking below the cloud here. We got the conversion line below the baseline, and we're tentatively above the cloud itself. So really that's 2 out of 3 reasons why if you have a short position open, you leave your short position open. Do I recommend shorting into a support range? Not necessarily, but once more, lately the way things have been moving, anytime there's a significant downtrend and it's followed by an uptrend, anytime there's a significant uptrend, it's followed by a downtrend. We're just seeing a lot of chopped salad in the market, and it's pretty much par for the course. The one thing I do want to take away here, I kind of leave you with, is this power of 3 and something just to pay attention to, because this helped us get a lot of profit yesterday. In other words, you see this accumulation phase of the price action works itself into a channel. It'll manipulate to the downside, effectively telling us we're going to be breaking bearish. Most people go short here and the price pumps up. Okay, this is the expansive way. So if you see that, the exact same thing happened recently. Worked ourselves into a channel. We had a manipulative wave there, and of course the price pumps up as well. Granted, majority of these have liquidation events. There was also a fundamental catalyst with neutral news on inflation yesterday too. So there's those things as well, but the key takeaway here is that we want to pay attention to these manipulative waves. These are the things we want to be taking longs on, right? We took a long here, we took a long here, inevitably turned into profit. And that's not normally something you should be doing, because a lot of these areas here, these little areas of manipulation, these are areas that give you confirmation to want to take a short, which a lot of people do, and it's very normal. So just be mindful of that, folks. That's a very consistent scenario here. I don't see any manipulative patterns here so far as kind of standard trading. So me personally, just kind of thinking outside the box here, or just shooting from the hip, if you will. This range of 82.5 to 84,000 seems pretty attractive to me. I'm interested in considering a long just because we have that descending trend, that short-term descending trend, bullish backtest there. We're also retesting this previous resistance, which we have to treat it like a support. Okay, that's how it's supposed to work for now. So hypothetically, we go long at 82.5, and Bob's your uncle. We go back up, right? However, keep in mind we lose 82.5. That's an area of invalidation. Then we're probably going to continue lower, pending that's not a manipulative wave down, right? Boy, such awesome stuff, right? This market really it makes you think a little different than traditional. These market makers are very crafty, so we just kind of got to get on board with how they think, and how they think is all about just screwing everyone over, because they're going to be, at the end of the day, just rich as hell. So awesome. Good for you guys. Anyways, thanks again so much for watching. Hope you learned something today. Obviously reference my Twitter, Telegram, and Discord. I have playout charts and some funnies along the way, but it's all available there for you. So hope you have a good one. We'll see you in the next one. Thanks again so much for your time. Take care out there. Bye-bye.